Today's CPI data bringing some relief with inflation cooling a bit from its peak in June. So what does that mean for investors? Well, for more, we turn now to the ETF think tank director of research, Cinthia Murphy, who joins us for this week's ETF report brought to you by Invesco QQQ. Good to have you back, Cinthia. So in this environment, where are you seeing investors pouring into with ETFs?
You know, that's a great question because it seems like the tone completely changed today. So up until yesterday, the story was all about hedging that risk, finding safety, and being really preparing for what makes sense to be invested in if this really is a recession. Where today, all it took was a little bit of good news and this inflation number that people perceived as positive to really change the tone. Today was all about growth, tech, risk, as much as you can get. So it's kind of interesting to see just how hungry investors have been for good news. And they took it and they ran with it. And today was all about the growth, risk, and risk that we haven't really seen appetite for all year.
Cinthia, there's no other ETF that symbolizes risk more than ARK, right? We've been talking about it a lot because of the big pullback we've seen. Up more than 6% today. And sure, it's off of the economic data we got this morning. But, in terms of strategy for those who maybe have been hit hard by some of these tech ETFs, is now really the time to get in?
Listen, that's the $1 million question, Akiko. In truth, ARK is really for the believers. And it's amazing that no matter what happens to that fund, no matter what Cathie Wood comes out and say, the followers are there, the investors are super sticky in this fund. Now, just yesterday, Cathie Wood was quoted as saying, we are already in a recession and we're going to be out of it by early next year. Well, if that's the case, then, maybe people are ready to start bracing in for the bounce we're going to see in growth and tech and disruption, because these are the most beaten down parts of the market this year. But, do you believe that? So the inflation number was great today, relatively speaking, because we were expecting much worse. In reality, it's still high. It's still affecting really sticky parts of the economy. And is it suggesting that the Fed all of a sudden is going to cut rates ahead? Absolutely not. So it could be that this is a one-day bounce. It could be that it lasts a little bit longer, but I think that's what everybody wants to see. What we do know is that today, if you look at the VIX index, which really is that fear indicator of the S&P 500, it's down 10% as an index, which is a huge drop. So today, everybody's feeling much better about taking on risk, about buying in funds like ARK, but one day doesn't make a trend. We'll have to see if this lasts 7 days, 10 days, if it's here to stay, or if it's just going to be a one-day event.
And speaking of risk, we're seeing obviously some of these crypto tokens rallying and some of these blockchain-related stocks. But what is your take on investing on those in terms of ETFs?
So what's cool about the blockchain, the crypto ETF space specifically, is that the number of funds is still growing in the segment. So like everything else related to crypto, related to disruption, to technology, they have been out of favor. These funds have been really beaten down. Market performance has been brutal on anything that touches the space this year. But product innovation is still happening there. There's still new funds coming out into the space, trying to offer different ways to access blockchain, different cryptocurrencies, the digital infrastructure. So, what I think is interesting, does that tell you that as an industry, we believe that there's potential here for growth and it's coming soon? Because it costs money to launch an ETF. And if issuers are launching these funds now, it's because they think they can attract assets. They're only going to attract assets if these things are going to perform. So I'm really actually curious to see if this is the beginning of a new wave of growth in this segment, or if the market's going to keep punishing these stocks until we're out of the whole recession talk and rate hike phase.
Cinthia, another type of ETF we've been watching really closely, probably a good measure of the risk appetite out there, and that is these single stock ETFs that are leverage bets against companies that are already highly volatile. Tesla, Coinbase, just to name a few. What kind of inflows are you seeing there, and how do you think investors should be playing this right now?
That's another really, really puzzling space right now, because that is all about risk, and it's about doubling down on risk, which has not been a theme we've seen this year. In terms of, are these assets coming into these funds sticky? It's too soon to tell, but volume is there. So investors are really using these ETFs to trade, whether they are really bullish on a stock or bearish on that stock, because you can do a bull or a bear play on a lot of these stocks. But they're meant as short-term tactical tools. So we see a lot of coming in and getting out very quickly of these things. So it's still kind of early on, but it's kind of fascinating that the riskiest type of ETF would come out at a time when risk has been so out of favor. So it's kind of a fascinating move in the ETF world, but we keep seeing launches. Another 8 launched yesterday, and there's several in registration. I think we just started scratching the surface. There's so many more to come, and they all offer different types of leverage you can use. So it'll be a lot of hedging ahead probably with these things.
Yeah, it is fascinating to see how quickly that has grown. Cinthia Murphy, ETF Think Tank Director of Research, appreciate the time today.